As Kate mentioned, we haven't presented at this conference before. We haven't presented at any conferences since the project has been taken through the PFS studies. So this is our first tryout for a while. Caravels are currently capitalised at around $120 million. It's a relative small fry in the scheme of things still, but as you'll see, we've got a very large project that we're working to take through the development. We've got a good shareholder base, but fairly tightly held by people who are close to the project, and we've got an experienced management team who've got a very strong project development and operational background. We're not an explorer. We're very much focused on this one project and taking it into production. Just a few highlights that I'll cover generally at the beginning, and then I'll just touch on a few of the key points that make this project a little different than most that you might see elsewhere. So the main thematic, obviously, is copper. We're very happy to be in this space at this time. Whilst copper's actually trading a little bit lower at the moment, sort of at a 6-month low, and we do tend to follow the copper price, we're going into a very interesting period of time with tight supply and increasing demand, possibly very strongly increasing. So it's a good thematic to be in. We've got scale. This is a very large project, 2.8 million tonnes of contained copper. We've got a very good outcome from the PFS, which we've recently published, over $2 billion MPV, and I'll talk about a few of those details later. And we've got beg your pardon, it's a bit hard for me to read my own slides. And it's a very simple project. So we'll cover a couple of the points about how something like this scale can be developed, but kept very simple. And the location of it is clearly a big advantage. We're only a couple of hours north of Perth, and Western Australia is an ideal location for this type of development. Very low political risk and very good access to mining technology and capability, which is a key if you're trying to do something like this. And our team's got experience not only in WA but around the world in major copper developments. Just run through a video that will just give an overview, shows you where the project's located, and I'll talk about a couple of interesting points as we go through it. So we're in what's called the southwest terrain of Western Australia. It's only a little way north of Perth. It's actually host to a number of world-class deposits, including the Greenbushes lithium mine in the south, Boddington, just near Perth, and the recent Julimar discovery. This is just magnetics highlighting the geological background of the area. You can see that large pink shape is the porphyry, the host to the porphyry deposits. And our mineralisation stretched out in those red colours over a 30-kilometre trend. This is a recent discovery by a company, Dominion, looking for gold about 10 years ago. And we've been taking it through as a copper project once it was realised that it's really a porphyry copper. The main deposit there, Bindi, is one of the keys to the feasibility. We'll look at Dasher in a second. You can see it's a folded over ore body, and that's one of the key benefits to the mining, is that because it's folded over on itself, it allows these pit shells to drive very deep. You can see the early stage pits are the smaller ones, and then the deep pits over 500 metres deep are the ultimate pit shells. The sections show you the high grade and the low grade zones in the broad yellow outline as we come back to it. We've got high grade ore zones that are surrounded by a low grade material. As it's very low cost, we can take all of the low grade material as well, so that gives us a very low cut-off grade and a very low overall mining cost because we can bulk mine. The Dasher ore body to the south forms part of the feasibility study. It's similar to Bindi, but we've prioritised Bindi in the early years. Once again, over nearly a 500 metre deep pit, and almost wide zones, hundreds of metres wide of mineralisation at those low cut-off grades. You can see the high grades there in the pink colour. So these two projects are about 5 kilometres apart. You can see the dimensions of the pit there, just under 3 kilometres long, a couple of kilometres wide. Those are the early starter pits. They go for about the first 5 years, and that's the ultimate pit there. Because of that continuity and because of the very wide mining widths, we're able to use large equipment. I'll show you a couple of examples of that later. And that greatly simplifies the mining costs by, we use large mining widths, wide mining widths, large equipment to drive down the unit costs. The plant there, located just to the south of the pit, it's a conventional copper flotation processing facility. The recent PFS has identified that we'll now be processing at a 30 million tonne throughput. So this is comparable to a lot of the large porphyry coppers in North America. We produce a copper concentrate that is sent out to a nearby port in Bunbury. And as we zoom out, you'll see that we're located on good infrastructure of existing roads, existing power. That's the overall site footprint, showing the waste dumps and tails facilities. You can see a lot of salt-affected land in some of those pictures where we've located most of our infrastructure on that salt-affected country. So that's zooming out, seeing Perth in the bottom there. The main road there that goes south from Perth to Bunbury is the concentrate route. You can see the power line back up into the main grid, and there's a pipeline 60 kilometres to our west to the bore field. Port of Bunbury would be our favoured port, although Geraldton is also an option. So the infrastructure is a very key component of this type of project. Just on the scale of this project, in the last 10 years, Caravel is the fourth largest discovery globally for copper. So whilst there's some very large ones that sit ahead of us, if you look at where they are, they're located in fairly challenging countries to operate in, like DRC in Indonesia. So Caravel's unique in being so large and also in a location that's very favourable for development. I mentioned that our mine plan is to drive down costs by bulk mining and by using the latest technology. And so this is just illustrating one of the technologies that we'll be adopting, which is the electrification of the haulage. And so this is a trolley assist. In the class of trucks we're using, the 240-tonne class trucks, this comes as a standard factory-ready feature, along with autonomy. So autonomy is the norm in Western Australia now. All of the mines in the Pilbara, all the new ones, are fully autonomous, and we'll be making full use of that experience and capability. And that's the key to driving down costs in the trucks, both the combination of substituting diesel for electric power and reducing labour through the autonomous haulage fleet. We're working closely with some of the main vendors who are well represented in WA and expect to have some news on progress in that area soon. The other key technology is in the processing end. So there's a lot to talk about in how you process these ores, but really the most important thing is how you grind up the material. That's where most of the cost is in terms of operating cost. And one of the big changes in recent years has been advances in the way that grinding can be done using technology such as these high-pressure grinding rolls. So Western Australia has just recently had a project commissioned called Iron Bridge by Fortescue Metals, which is the world's largest installation of these types of grinding rolls. So there's a deep level of capability and service experience being developed in Western Australia to support this. And this was one of the key factors that brought our costs down substantially in the recent pre-feasibility study. So in the mining side, the technology around the large fleet, the autonomy and the electrification is key, and that's about half of our operating cost. On the processing side, the comminution and these types of technologies for reducing operating cost on the processing are the other half of our costs, and that's the key to driving down overall unit costs. It gives us a lot more flexibility as well in how we manage our peak power demand, which is important given the nature of the changing grid to a much more volatile form of grid management with spikes in energy prices. So putting all those things together is the key for how we can successfully develop this project as a junior. And one of the biggest challenges for a junior company taking on a large project like this is not only the management, but the financing of all of those components. The key for us is we're working very closely with a number of partners that we've identified that are leaders in these areas, and we're effectively looking to borrow their balance sheets and their capability So this partnering approach is core to our development strategy. We've recently appointed the appointment of Lycopodium for our engineers going into the definitive feasibility study. Lycos have got a lot of experience in large-scale copper projects, most recently doing the engineering for the First Quantum's Cobra Panama project in Panama. We also have been developing a close relationship with one of the major constructors in Australia and in the Southern Hemisphere, and that's Civmec. Civmec are doing most of the major projects in the Pilbara, and they've got this fantastic facility that's pictured there, located just south of Perth. And we're working closely with them on how we prefabricate and develop most of the plant as modules that can then be trucked directly up the highway to our site, which is only about 3 hours drive from their facility. And that has a huge impact on the risk and the performance and quality control of how you build something like this, where it can be, or a lot of the detailed work can be done by them in the controlled environment of their workshops and then put together at site. The mining fleet I've mentioned, we're working closely with some of the major equipment vendors there. One of their motivations is that they're very keen to have a demonstration site so close to Perth. So we're getting a lot of attention from some of the guys that want to show off their new technologies, and it's becoming very hard for them to do that. And we're working very closely with the vendors of the major components of the process plant. So the project financials, as I mentioned, are looking very good. This is at the PFS stage. We're about to go into DFS. We're showing around a $2 billion NPV. Looking at the project cash flows that support that, that's an EBITDA of around $360 million a year. In our early years, a bit higher, around $500 million, based on $4 copper. $4 copper at 72 cents is about where the copper price is today. Copper itself per pound is a bit lower, but the Aussie is a bit lower too. So we're looking at rates that are similar to today's, and we obviously expect those rates could go up substantially in the future. We have an eye on a number of upside technologies that we believe are going to be very important for these types of projects, where we initially are just looking at the routine things, expanding the resource, improving the mine plan. That work will come out over the coming months. And we're looking at some other very interesting technologies for beneficiating the ore into the plant as a future value add-on. Our time frame at the moment, we're commenced a number of the key studies for the definitive feasibility. We'll commence the engineering second half of this year, so we expect to be at completion of the definitive feasibility study early next year. So that's a key point in the transition for a company at this stage, taking the risk out of the project and starting to see some proper recognition of the underlying value as we de-risk it. The timing is looking very interesting. The world copper market is reacting to short-term problems at the moment, short-term concerns about the economy, but even at the steady state economic growth, GDP of 2.5% to 3% growth, copper is still going to grow by over 1 million tonnes of demand every year. So the supply and demand outlook is strongly out of balance, and that means prices have to move much higher to get that back in. It's very hard to see any way around that because there are very, very few new projects coming into production. So key attributes of this project are its long life. That allows us to develop it very carefully and put in place all the right capital and operating procedures for a long life mine and drive down our costs. We've got a resource base that can expand much longer mine life. We expect to push it out well into the 30 plus years. It's a very simple project, bulk mining in an open pit and conventional processing. We're currently modelling very competitive costs, around $2 a pound all-in sustaining cost, and so that gives us very good margins even at the current $4 a pound, all of those in US obviously. We also have quite a low capital intensity because of the extremely good location. We're not building lots of infrastructure, and that all feeds into a good NPV at current levels. That NPV is equivalent to more than $4 a share based on the current capital structure, and that goes up by $1 billion for every 50 cent a pound increase. So we have a lot of upside against the copper price. I haven't mentioned ESG and a lot of other things that go into a project like this, but they are very good where we are. We have no native title. We're having very little impact on the environment, no clearing, very good community support. Lots of upside for the other things I mentioned, and we've got a fairly short time frame to bringing all that to a much more definitive study early next year. Thanks very much.